Hello, everyone. Welcome back to Financial Path. There's a quiet opportunity brewing in today's markets that might not make front page headlines, but it could quietly build your wealth. That opportunity is silver. I'm not here to sell you silver. I'm here to show you why, based on clear economic signals and historical patterns, now may be one of the best times to consider silver as an investment. Let's start at the foundation. We all know that silver has been used as money throughout human history for thousands of years. Its value, durability, divisibility, and recognizability make it ideal for trade and wealth storage. Beyond monetary use, silver's physical and chemical properties make it incredibly and widely useful in modern technology and industries. Silver has the highest electrical conductivity of all metals, making silver indispensable in electronics, including circuit boards, switches, and connectors. It also has superior thermal conductivity, making it ideal for heat-sensitive applications like solar panels, radiators, and high-end electronics that require effective cooling. Silver reflects light more efficiently than any other metal, making it essential in mirrors, solar energy reflectors, and optical devices. Silver ions can kill bacteria and other microbes, so silver is used in medical, tools, wound dressings, and even water purification systems. Silver is chemically stable. It resists corrosion and oxidation, ensuring longevity in products and structures. The truth is that nearly 50% of the annual silver supply is used in industrial applications and manufacturing. Industrial silver is truly indispensable in modern society. The world is undergoing a green revolution. In this revolution, many countries advocated installing highly efficient solar energy and designing highly efficient electric vehicles. Both sectors require silver to achieve the highest performance. So, we can say that the green revolution equals the silver revolution. Now, the largest industrial use of silver is in the solar energy sector, and the Silver Institute expects that the second biggest industrial use of silver will soon come from the automotive industry. With the world shifting towards electrification and renewable energy, silver will become more critical and in demand. The graph shows that solar installation costs have dramatically declined, and solar usage has surged at the same time. This has obvious appeal to governments and consumers, and underscores the fact that solar demand will continue to rise, which means silver demand for this sector will rise. Let's continue to examine the electric vehicle sector and market. Global electric vehicle sales were 3.24 million in 2020, up a whopping 43% over 2019. Numerous consultancies report EV sales are going nowhere but up. Analysts think that by 2030, most new car sales will be electric. The push continues. Elon Musk said that Tesla plans to reach 20 million annual EV sales by 2030. It was 1.8 million units in 2024. Daimler will invest $85 billion between 2021 and 2025 in EVs. Volvo Cars will triple its electric production capacity in Ghent after a strong year of EV sales. Volkswagen is boosting total digital mobility expenditures to $150 billion. Others also give their EV targets. This is significant because EVs use almost twice as much silver as an internal combustion engine vehicle. Hybrids use about 22% more silver. Because EVs and hybrids use more silver, demand for silver will naturally rise. This graph forecasts that the EV and HEV will dramatically increase the demand for silver every year. The demand for silver in 2040 will grow by one-fold of the usage of silver in 2025. Further, traditional battery EVs use up to 50 grams of silver. The next generation solid-state battery is in the research and development stage. Silver demand could be 1,000 grams per car after using the solid-state battery, and its mass production is expected to start by 2030. The solid-state battery will be safer, and the EV car companies will certainly use the safer solid-state battery in their EV cars. Think about that. A 20x increase in silver demand per EV car. That will lead to skyrocketing demand for silver in the following years and subsequent decades. The conclusion is clear. Demand for silver from the two sectors is about to explode, and it is a long-term trend. From the just now explanation, we know that the demand for silver from the solar and automotive sectors is going nowhere but up. Broad use of silver in many other capacities will increase demand from thousands of industrial users. This is fine as long as the supply can keep up, but that's the problem. Let's look at this global data graph. The graph shows that although 2024 silver production grew by 4.1%, the long-term trend in mine production is still declining. One reason is the falling global silver reserves. The easily accessible, high-quality silver deposits have already been mined. Today, about 75% of new silver is a byproduct of mining other metals like gold, copper, and zinc. In addition, the perpetually low silver price forced many miners to reduce exploration budgets. If you spend less time looking for silver, naturally, you will find less silver. This results in a structural problem, and the production can't just ramp up overnight. From this metals focus table, we can see that although recycling has increased, it can only keep the supply flat. Since 2020, demand has outpaced supply for several consecutive years. We have said that the demand for silver will explode with the continuous development of green technology. The insufficient silver supply is a structural problem that can't be resolved in the short term. Basic economics tells us that prices must rise when demand consistently exceeds supply. It's not a question of if, but when. Therefore, investors who invest in silver will stand directly in the path of profit. Let's talk about inflation. You've felt it. Now groceries, gas, housing, everything costs more. Since 1971, the US dollar has lost about 86% of its purchasing power. Back then, a loaf of bread cost 25 cents. Today, it's over $3. Fiat currencies are constantly devalued, especially during heavy government spending and monetary easing. Silver, on the other hand, preserves purchasing power. When inflation rises, the value of precious metals often rises, making it a reliable choice for investors looking to protect their purchasing power. During economic crises and monetary turmoil, such as the 1970s and the 2008 financial crisis, silver saw significant price increases. Even though gold is often seen as the traditional hedge against inflation, here's the kicker. Silver not only protects against inflation, it may outperform it thanks to its industrial demand growth, especially in the developing green technology. So, silver is not just a store of value. In the current macroeconomic climate, it's an appreciating asset. Many investors are interested in looking at the GSR indicator to judge whether gold or silver is over or undervalued. GSR is the ratio of the gold price to the silver price. Historically, 1 ounce of gold was worth about 15 to 16 ounces of silver. The U.S. Coinage Act of 1792 even fixed the ratio at 15:1. The average gold-silver ratio was 47.1 throughout the 20th century. In the 21st century, it has ranged mainly between 50.1 and 70.1, breaking above that point in 2018 with a peak of 104.98.1 in 2020. The lowest level was 35.1 in 2011. Today, that ratio is hovering around 100.1, meaning gold is trading at around 100 times the price of silver. Even assuming a conservative reversion to the historical norm of 61, silver could double in value to catch up. And if it narrows to the 20.1 level seen during major bull markets in the past, that could mean a 5x return from current levels. That's why many investors believe silver is deeply undervalued, a rare asymmetric bet in today's market. However, in my opinion, to judge whether silver is undervalued or overvalued, we just need to see the long-term supply and demand trend. As long as the long-term relationship of demand exceeding supply is expected to exist, investment at any time is correct. If you're considering silver, the following ways can be referred to. Physical silver. They are the coins and bars you can hold in your hand. This is tangible wealth, offering direct ownership. There is no counterparty risk. You should buy physical silver from reputable dealers online or through local coin shops, comparing the current spot rate before purchasing. Never buy from shady sources, as fake silver is common. When buying coins, please make sure they are in the best condition and are rare. The rarest coins in the best condition will usually have a ready buyer. Do not buy worn coins and those produced in large quantities, as this will reduce their value. Pick coins that are aesthetically pleasing and popular. 2. Paper silver, or ETFs. If convenience and liquidity matter more, consider silver ETFs. You can trade these like stocks. They track the spot price of silver and offer easy entry and exit. For large transactions or short-term positions, this may be ideal. You have to pay fund management fees. Each has pros and cons. Physical silver can't be hacked or frozen, but requires secure storage and isn't as easily sold. ETFs are convenient, but may not offer the same peace of mind during a systemic crisis. Silver is a long-term investment, but knowing when to take profits is just as important. Some seasoned investors recommend using the gold to silver ratio as a guide instead of targeting a specific price like $50 or $100 an ounce. They suggest, if the GSR drops to 50.1, consider selling a portion. If it falls to 40.1 or lower, that may be the time to offload most of your silver. History has shown that silver's price can move fast and violently. Investors can consider selling part of their investment when meeting a short squeeze, where the price spikes rapidly due to panic buying. When the price falls, consider buying, as long as the relationship of demand exceeding supply is still expected to exist in the long run. In addition, when you find a significant event that may change the current long-term trend of silver demand exceeding supply, that should be the real time to quit your investment in silver. Thanks so much for watching. If you find this video interesting and helpful, subscribe to my channel for more videos. Your support allows us to continue. See you in the next video.